Thanks, Mary. Thank you very much for that introduction. And like Mary, I would also like to thank all of you for joining us here this evening as we begin our tour of the Bakken oil patch. This is my second visit to Minot in about a year. I was here last October for a similar tour, and I learned so much that I urge our entire board of directors to come out here too. They didn't need a lot of urging. So one of our directors, Howard Dahl from Fargo, who many of you know, has been telling us so much about this land of milk and honey that it was easy to persuade the rest of the board that they should see it for themselves. I haven't seen any of those pigs running down that are already roasted yet, Howard, so it was easy to persuade the board to come out here and see it for themselves. Having had a good preview last year, I know that everyone will be impressed, and not only with the drilling sites and the crew camps, but also with all the truck traffic that we will encounter as we approach Williston. Now, at one point during my last trip, I was attending a meeting in Sidney, Montana, and we were waiting for a speaker from Williston. Now, he called to say that he was going to be late coming into Sidney, Montana because of traffic. Now, I haven't spent much time in this part of the world, but my guess is this is not something that I would have heard 5 years ago. Now, more seriously, as we think about the tremendous economic returns that this area is experiencing, it's important for us to keep in mind, too, that there are certainly some costs associated with generating those returns. And I'm sure we'll hear more about those benefits and costs tomorrow. So you've heard from Mary, and I've mentioned Howard. Let me begin by making a quick introduction to the rest of the members of our board. As you listen to my intros, you might find it useful to keep in mind that the Minneapolis Federal Reserve District includes the states of Montana, North and South Dakota, Minnesota, and parts of Wisconsin and Michigan. So here are our directors. Mary Brainerd, who you've met, President and CEO of Health Partners, and she's our chair. Randy Hogan, if you want to stand up, Randy, you can. Chairman and CEO of Penn Air in Minneapolis is our deputy chair. And Mike Kyle Hong is President and CEO of the Amherst H. Wilder Foundation in St. Paul. There's Mike Kyle. Now, those three directors are what we call Class C directors. What that means is they're appointed by the Board of Governors in Washington, D.C. to represent the public. Now, we also have Howard Dahl, who's President and CEO of Amity Technology in Fargo. Howard. Bill Shorma, President of Rushco Strategic Rail Services in Springfield, South Dakota. And Larry Simpkins, Chairman, President, and CEO of the Washington Companies in Missoula, Montana. Now, these three directors are known as Class B directors. Like the Class C directors, Class B directors are also represented as the public, but they're not chosen by the Board of Governors in Washington. Instead, they're elected by banks in the Minneapolis Federal Reserve District who are members of the Federal Reserve System. So we've got the C directors, we've got the B directors. You can guess that the next group of three directors are termed the Class A directors. And those directors are elected by member banks in our district to represent those banks. And our Class A directors are Julie Causey, who's the chair of the Western Bank in St. Paul, Ken Palmer, Chairman, President, and CEO of Range Financial Corporation and Range Bank in Negaunee, Michigan, which is in the Upper Peninsula. Ken, there you go. And finally, Dick Westra, President and CEO of Dakota Bank in Aberdeen, South Dakota. Also present today is Jake Marvin, Chairman and CEO of Marvin Windows, and our former board chair who served our board for 6 years, ending last December. So I'd like to publicly thank all these people for their public service. Being a board director is a job that demands much and returns little beyond the fulfillment associated with important public service. And this event is really a great illustration of what I'm talking about. Like all of you, these are busy people with important responsibilities back home. So for them to take the time from their schedules to tour a region of our district speaks volumes about their commitment to their tasks. Now, I should also mention that we're joined by members of our bank senior management team as well as other bank staff today. While I won't take the time to introduce each of them, suffice it to say that this, too, is a group of highly dedicated public servants. They provide outstanding leadership and support to the Federal Reserve Bank of Minneapolis and the Federal Reserve System. I do want to particularly acknowledge Barb Pierce and Patty Lorenzen. Barb and Patty. They're very shy people, but for their tremendous help in setting up the logistics for this event. We are also quite fortunate to have two expert local tour guides for tomorrow, Lauren Cosping and Ron Ness. I don't know if they're here today. Lauren and Ron?
They're busy planning.
Oh, good. Good. Before I go on, now I'm shifting gears a little bit, so I have to remind you that the following views are my own and not necessarily those of others in the Federal Reserve. So, as Mary described in her remarks, one of the strengths of the Federal Reserve System that Congress designed nearly 100 years ago, in 1913, is its system of regional banks and branches that ensures representation from citizens in towns and cities throughout the country, including relatively small communities like Springfield, Aberdeen, and Nogany. What I'm going to do in the remainder of my remarks is to describe the decentralized nature of the Federal Reserve, especially as it pertains to monetary policy, and then discuss the role of the directors. And after that, I'll be happy to take your questions on these subjects or other issues on your mind this evening. In addition, as Mary noted, if you'd like to direct a question to her about her role in the Board of Directors, she also stands ready. Okay, so let me begin with, in terms of talking about the structure of the system. The Federal Reserve Bank of Minneapolis is one of 12 regional reserve banks that, along with the Board of Governors in Washington, D.C., make up the Federal Reserve System. Our bank represents the 9th of the 12 Federal Reserve Districts, and by area, I should say, emphasize by area, we're the second largest. By population, we're the smallest, but as I mentioned earlier, our district includes the Dakotas, Minnesota, northwestern Wisconsin, and the Upper Peninsula of Michigan. So I'm often asked this question by relatives, but and it's good to have finally have a clear description to point them to, is what do you do with the Federal Reserve Bank? Well, within the Federal Reserve, we have clever ways of describing the work we do. For example, we use the highly technical term three-legged stool to describe our primary roles. Now, what do we mean by this three-legged stool? We mean payment services, supervision and regulation of financial institutions, and monetary policy. So I'm going to be brief about the first two, payment services and sup and reg. The first leg means that the Federal Reserve Bank of Minneapolis, along with the 11 other Federal Reserve banks, work to ensure the smooth movement of funds between banks, savings and loans, and credit unions through a nationwide electronic payment system. As for the second leg, the Federal Reserve Bank of Minneapolis supports the Federal Reserve System in ensuring a safe, sound, and accessible banking system and stable financial markets through supervision and regulation of the nation's banking, financial, and payment systems. So what this means is the system is implementing rules and regulations and writing rules and regulations as mandated by Congress, and the Federal Reserve Bank of Minneapolis is help implementing those. So in doing so, we work with other federal and state agencies and regulators to promote safety and soundness in the operation of the financial services industry. Now these are very important responsibilities, payments and supervision and regulation, and especially supervision and regulation, which has grown in prominence since the financial crisis and the passage of the Dodd-Frank Act 2 years ago. But I want to move on. I'm going to talk mainly about the third leg of the stool, monetary policy. As this role is probably the one that most directly impacts the lives of Americans, and it's also the one where the role of our directors, who I'm highlighting today, is most prominent. So monetary policy is established by the Federal Open Market Committee, or FOMC for short. And the FOMC meets at least 8 times per year, and it consists of the 7 governors of the Federal Reserve Board in Washington, the president of the Federal Reserve Bank of New York, and a group of 4 other Reserve Bank presidents that rotates annually. Now, for example, I was on the FOMC last year in 2011, and I will be a member of the committee again in 2014. Okay, so, but even though there's only 5 voting presidents on the committee in any given year, all 12 Reserve Bank presidents, whether they vote or not, are participating in FOMC deliberations. Now, I think it's a very important point to take away, that all 12 Reserve Bank presidents are there and contributing to the decision making. And it's because it really highlights the decentralized nature of the Federal Reserve's policy making. All of the presidents bring their perspectives on the economy to every meeting. And those perspectives are shaped, in part, by what we learn from our districts, from our local communities. And our directors play a big role in that information gathering process. So at every board of directors meeting, we're going to have one of those tomorrow I guess right here in this hotel. A number of directors are charged with answering questions about trends in the economy. For example, our firm is planning to hire. What are their capital expenditure projections? Are input prices changing? What are firms' expectations for growth in the near and medium term? And our directors don't just answer those questions from the perspective of their own companies. Rather, they contact a number of businesses in their regions and industries to gauge broader business sentiment. And I think this type of information is invaluable for policymakers. As you might imagine, the Federal Reserve is very good at aggregating and analyzing data. But data often lag, and so they don't give a complete description of what's currently happening in the economy. The information that I receive from our directors is important in helping me complete that economic picture. So I've been emphasizing the Board of Directors' role in this. I should also note that the Federal Reserve Bank of Minneapolis has 3 advisory councils to seek further input from citizens in our district. These councils have members from the agricultural industry, small business and labor, and the financial services industry. As well, we have a branch office based in Helena, Montana, and we receive valuable economic intelligence from the members of that branch's board of directors. So I've described the Federal Reserve's decentralized structure, especially as it pertains to monetary policymaking. And I've also begun to explain the director's role by illustrating how they contribute to that policymaking. So I'm going to shift gears a little bit to talk about some of the other roles of the directors. Directors, as you would imagine, do more than just provide economic intelligence. In particular, as Mary mentioned, they also provide oversight of bank management. I think, in some respects, this is similar to any board of directors. For example, through committees and board deliberations, directors review and approve the bank's annual budget, review the bank's annual performance, and oversee the internal audit program and the bank's control environment. This kind of oversight helps ensure that Federal Reserve banks are run as effectively and as efficiently as possible. And I know that I speak for all of our management team when I say that we benefit on an ongoing basis from the collective wisdom that gathers in our boardroom for our meetings. And I began these remarks by introducing our board and describing the various classifications in which they serve. Now, those classes A, B, and C may seem rather mundane, but they really are quite meaningful. So, again, Congress had a good idea about how the Federal Reserve should be structured when it formed the system a century ago, and that structure has stood this test of time. That first group that I mentioned, the Class C directors, who serve to represent the public, are, as I mentioned, appointed by the Board of Governors in Washington. Now, that last point is key, because it ensures that the Board of Governors, which is appointed by the President of the United States and approved by the Senate, has a say in the makeup of our Board of Directors. So in that respect, our local Board of Directors in Minneapolis has a direct connection back to the federal government in Washington, which is important. Now, the second group of directors, the Class B directors, are also chosen to represent the public. But they're elected locally by member banks from each district. Now, this too is also important because it serves to ensure that the public is represented by directors who are chosen locally and not by Washington. So in this way, the framers of the Federal Reserve Act carefully balanced national and local interests in the composition of bank boards of directors. Now, the last group, the Class A directors, who are elected by member banks to represent those banks, are the ones that have received some attention of late. Since the financial crisis and the extraordinary measures that the Federal Reserve has taken to prevent the collapse of our financial system, some have questioned whether it is appropriate for bankers to sit on the boards of Federal Reserve banks. Isn't it wrong, these critics ask, to give bankers power over those who are supposed to supervise them? Now, this would be wrong if it were true. But members of board of directors, bankers or not, have no say in how Federal Reserve banks conduct their supervisory operations. Supervisory matters are handled directly between bank staff And the Board of Governors, who, as you recall, were appointed by the President and confirmed by the Senate, they're held directly between bank staff and the Board of Governors in Washington. Supervisory matters are not part of the business of the Board of Directors. What is a part of the business of the Board of Directors is the important information that bankers relate about credit conditions in the economy, about issues pertaining to the payment system, and about general business conditions. And this is the kind of information that monetary policymakers like myself need to do our job, whether under extraordinary or in normal economic conditions. Our Board of Directors and our senior management team have made this trip out to western North Dakota to learn more about your economy and what makes it tick. But I'm glad, too, to have had this opportunity to tell you a little bit about our Board of Directors, a group of dedicated public servants whose role is often misunderstood by many. Now, I'm happy to take questions on what I've talked about or anything else that occurs to you, and I'll do my best to answer the easy ones. We have our crack staff here ready to answer the hard ones. But I thank you very much for your time.